ICT or SMC. Most new traders think that this is the new holy grail of trading. And in fact, it has gotten so popular that people think there's no other way to become profitable in this business unless you learn these two systems. That is absolutely false. A student of mine last week made $3,500 in 5 days without using the ICT or SMC systems, and I personally have made over $24,000 this month, and I did not need years of learning ICT or SMC concepts. But how? I can tell you that I did not have advanced concepts or 5 to 10 different entry criteria. I used one simple strategy that I can replicate on a daily basis. So if you stay till the end of this video, I will show you not only my strategy and how you can replicate it, but I will also show you the exact entry and exit points of my trades and the reasoning behind each one. Before we get into this video, if you guys want to see exactly how me and my students make 15 to 50,000 per month trading options only 1 hour a day, step by step, make sure you like this video. If this video gets to 100 likes, I will drop a full 1 hour video from scratch to finish showing you how you can make $15,000 per month from trading. SMC overcomplicates everything, and the reality is simple is better. We heard it all before. Keep it simple, stupid. So with that said, let's go ahead and dive in so I can show you exactly what it is that you can do. So I can confidently tell you that I've made over $2.5 million in the stock market without making things complicated. All right, keeping it simple is probably the only thing most traders should be doing and focusing. 11 years ago, when I first started trading, I thought that the more complicated things were, the more money I can make. And the harsh reality is that that is incorrect. The more simple you make it, the more you're actually in a position to be profitable. So after 4 years of trial and error and losing over $120,000, I figured out that the best thing to do was, one, cut the noise from social media and all these YouTube videos that people are teaching all these different crazy concepts, and focus on price action and volume. These are the first things that you need to do. Settle down. There is no shiny object that's going to make you a better trader. Buckle down, read a few books on price action and volume, and really hone in on mastering that. Okay, so the first thing you need to know is price action plus volume. Okay, once you figure that out, you need to understand what dictates a move that's going to allow you to hop in and make better trades. So what is that? What makes a trade an A+ setup versus a non-A+ setup? Okay, and that comes to pattern. All right, you need to learn patterns. And why patterns, right? Why not, ICT methods? Why not SMC methods? Why patterns? Well, because when you're looking at patterns, you're trying to identify what the masses are. So why does a bull flag work so well, right? Because Joe, Alex, Mo, Henry, Christina, everybody is able to identify this pattern, and everybody knows when this level breaks, that is when they should all enter the trade and continue taking it to the upside. That is why when the pattern presents itself at that trigger point, the volume also spikes. This is why it's so important to understand price action and volume, because now you can kind of put everything together. You have a pattern that everyone can recognize. Once the pattern breaks out of this level, you can confirm with the volume spike and you can take the move to the upside. Now, I'm not just saying focus on patterns, you also need to have a certain strategy that allows you to be in the right setup and the right trade so you can make a better high profitable or high chance of success. So you can be in the correct trade to have a high potential win rate on that trade. And how do we do that? Well, not only do we focus on patterns, we also want to focus on the bigger time frame, which is the daily chart. All right, when we're looking at the daily chart, what are we looking for? One, we want to see enough space between support level and the resistance level. So there needs to be enough room between the support and resistance. I call this the meat. There needs to be meat on the bone. If there's no meat on the bone, it doesn't make sense to trade it. And also there needs to be enough that we can say, okay, you know what? We have enough meat on the bone that, number two, there is no moving averages in the way. That is really what we're focusing on. We're focusing on price action and volume, and we're focusing on pattern. Now I'll explain explain to you how we do this in detail, but this is the gist of it. All right. You don't need to make it complicated. You don't really need to start reading into the news. What did the news say in the morning? What's happening? You don't need to add your own bias. In fact, keeping it bias free is the best thing you can do. Now, with that said, let's talk about a trade that I took that you guys can see exactly why and how much it paid in a very short period of time, simply because we were prepared from the daily level and an intraday level. We can see that we have this move up. We have our pattern of a falling wedge forming. And as soon as we got out of this level, you can see the volume spike. And in fact, we closed over this resistance right here. This candle closed over this prior resistance, confirming that we expect to move higher. Now, on this day right here is when I took my trade. What was the expectation on this day? Because on this candle, we broke above the prior resistance and we closed above that prior resistance with increasing volume, above average volume. This following day, we were already predicting a move to the upside into this $59 area. Why? Because you have a falling wedge, you have a spike in volume on the move up, you have a pullback into a moving average on decreasing volume, and as soon as this candle breaks out, volume spikes, closes above the prior. Now we know we have to continue moving higher, or chances are at least 85% of it, that it's going to continue to that next resistance point. And that's exactly what happened. Now, how did we trade this intraday? Let's take a look. So we came into the pre-market knowing that we have good resistance right here at around 57.40 and yesterday's high of around 57.35. As we're coming into this pre-market, before the market opens, we're building a game plan, and that game plan consists of what? The daily chart is in our favor because we have a falling wedge. We broke out, we passed that prior day, and we have room till this level. So today we're expecting a move higher. Now, as we're sitting in the pre-market, we know that this is the bigger picture. So we're going to expect that move through the 57.46 to catch it for a momentum drive to the upside. Here, the market opens, and as soon as it penetrates through that level, we enter the trade, right? So we enter the trade, and take a look at what happens shortly after. Once we got through our trigger right here is when I entered, had a little bit of a pullback, and the stock continued pushing all the way up to 58.40, 58.50. And in this move right here, in under 30 minutes, I was able to take almost 70% because I planned the night before. I knew what the daily was telling us, and we had a high probability setup to enter the trade and continue moving high. That's all it took. I simply looked at the daily, made sure there is room or meat on the bone to continue going higher towards that 59 in this case, found a nice trigger and got involved because I knew the daily was in my favor. The daily just broke out of a nice falling wedge pattern, and chances are momentum is going to push this to that next resistance level. And as the day went on, we hit that 59, bam, rejected, and then the following day hit it again and rejected. So that level was very valid, and we saw the rejection after we hit it 3 times. So I hope you guys found this video educational, and I hope you now understand that you don't need 65 different entry criteria, and you don't need to make it complicated. Focus on making sure that you understand price action and volume. What's the overall picture telling you? Position yourself in a trade that doesn't have any overhead or any resistance, or in a bearish scenario, any support down below, and follow a pattern or a system that allows you to get into that trade and have a high probability, high win rate, and high profit setup. In this case, we literally planned 20 minutes the night before. We focused 15 minutes before the market opened to give ourselves the trigger. We got involved, and within 20 minutes, we made 70% on a single trade, which was one of the biggest profits I've had this month. Now, if you enjoyed this video and you also want to make anywhere from $7,000 to $30,000 per month only trading 1 hour a day, all my students do this. I have so many people that are making $20,000, $25,000, $30,000 per month trading only 1 hour a day. And if you want to be one of those students and want to work with me one-on-one, click the link down below, book a call to speak with me, and we'll see if you even qualify to be in the program. If you're not ready to work with me one-on-one, watch this video right here. It's a free video you can watch, get some knowledge, get some input, and learn how to become a better trader.